Good morning, everyone. Today marks a truly significant moment in the world of British finance. Lloyds Banking Group, one of the UK's largest and most recognized banks, has just seen its stock price reach a level not witnessed since the financial crisis of 2008. On February 4, 2026, Lloyds shares soared to 114.40, a milestone that hasn't been achieved in over a decade, capturing the attention of investors and analysts alike. This achievement marks a major turnaround for a bank that has weathered some of the toughest times in recent memory, and it signals a renewed sense of optimism and confidence from the investment community. Over the past year, Lloyds stock has surged an impressive 75%, outperforming not only its banking peers, but even some of the world's most successful tech companies, a rare feat in today's market. So, what's fueling this dramatic rise? Is it the result of a stronger UK economy, a smarter business strategy, or perhaps a combination of both factors working together? In this chapter, we'll break down the key factors behind Lloyds' impressive comeback, from recent legal victories that have cleared the path for growth, to bold financial strategies that are reshaping the bank's future. When a household name like Lloyds makes such a significant move, it doesn't just affect shareholders, it impacts everyday savers, market confidence, and even the broader UK economy. We're here to explain why this matters, what's at stake, and what it could mean for the future of banking and finance in Britain. Let's dive into the details of this impressive financial turnaround and explore the story behind the numbers. Stay tuned as we unpack the remarkable rise of Lloyds Banking Group and what it could mean for the future of the UK's financial landscape. Why does a rising stock price matter so much? It's more than just numbers on a screen. It's a signal that can ripple through the entire economy, affecting businesses, households, and even the mood of the market itself. For Lloyds, hitting a decade high is a powerful vote of confidence from investors and the financial community. It shows that people believe in the bank's future, its leadership, and its ability to deliver results in a changing world. Lloyds is a cornerstone of the UK's financial system, serving millions with mortgages, loans, and banking services. Its reach extends into nearly every community, making its performance a barometer for the nation's financial health. A strong Lloyds signals optimism about the UK economy, stable finances, business investment, and a healthy housing market. When Lloyds does well, it often means businesses are borrowing, people are buying homes, and confidence is high. Millions have their savings and pensions tied to Lloyds, so a higher share price directly boosts their financial security. For retirees and families planning for the future, this surge can mean greater peace of mind and more robust nest eggs. A strong stock price also gives Lloyds more flexibility to invest, innovate, and defend against takeovers. It can fund new technology, expand services, and attract top talent, keeping the bank competitive in a fast-evolving industry. This surge isn't just a comeback. It's the start of a new chapter filled with opportunity. It marks a turning point, suggesting that Lloyds is ready to shape the future of banking in the UK. The performance of Lloyds is watched by everyone, not just financial experts. Everyday people, small business owners, and even students keep an eye on its progress, knowing it can impact their own lives. When a bank like Lloyds thrives, it's a positive sign for the whole country. It reflects stability, growth, and a sense of shared progress that reaches far beyond the trading floor. Let's see what's fueling this optimism and what it could mean for the future of the UK economy. So, what's behind the sudden rush to buy Lloyds stock? Much of it comes down to analysts, financial experts who study companies and influence investor decisions. Recently, top analysts at Deutsche Bank and Barclays upgraded their outlook on Lloyds, signaling brighter prospects. When respected analysts raise their ratings, it sends a strong message. The experts see real potential. Multiple upgrades create momentum, making investors more confident to buy in. This wave of positive sentiment helped spark the recent rally in Lloyds' share price. It's like getting glowing recommendations from trusted friends. You're more likely to act. Expert opinion and market psychology combined to fuel Lloyds' climb. Investors saw the upgrades and wanted to be part of the story. That's how analyst confidence can move markets. Analysts don't just give opinions, they set price targets, forecasting where a stock could go. Deutsche Bank raised Lloyd's target to 125 pence, while Barclays set theirs at 120 pence, both above the current price. Even more cautious analysts, like those at Citigroup, raised their targets, showing a general trend of optimism. These targets act as signposts, guiding investors and reflecting detailed research. When most major analysts raise their targets, it signals a healthier, more profitable company. For Lloyds, these new targets confirmed that its turnaround was real. Investors took this as a green light to buy, fueling further gains. Price targets aren't guarantees, but they shape market expectations. The consensus: Lloyds has room to grow. That's the encouragement investors needed. Let's look at the numbers driving this optimism. Lloyds' return on equity stands at a healthy 11.2%, showing efficient use of investor money. Its market capitalization is now over $66 billion, making it one of the UK's most valuable companies. The price-to-earnings ratio is 19.8, higher than before, but reasonable for a growing, profitable bank. Earnings per share hit 7 pence last quarter, a key indicator of strong performance. These metrics, profitability, size, valuation, and earnings, paint a picture of a robust, well-managed bank. Investors see a company with solid fundamentals and real growth potential. That's why confidence is surging. The numbers back up the story. Lloyds is on the right track. Beyond the numbers, a major legal victory changed everything for Lloyds. For years, UK banks faced a huge legal threat over car loan broker commissions, with billions potentially at stake. This uncertainty kept many investors on the sidelines. Then, the UK Supreme Court ruled that banks like Lloyds weren't liable for brokers' actions. Instantly, the risk of massive compensation payouts vanished. The legal cloud lifted, and investors could finally focus on Lloyds' business strengths. This ruling was a game changer, removing a major obstacle overnight. With the threat gone, Lloyds' true value came into focus. The court victory unleashed the stock's potential and sent its price soaring. Investors love certainty, and this decision delivered it. That's why the market reacted so strongly. The Supreme Court's decision had an immediate psychological impact. With the legal risk gone, investors could focus on Lloyds' strengths: profits, cost control, and market position. The ruling made Lloyds a cleaner, more attractive investment story. Money once set aside for legal risks could now be used for growth, technology, or higher dividends. The court victory opened a clear path forward, signaling reduced risk and strong performance. This combination is exactly what investors want. Confidence surged, and demand for Lloyds' stocks skyrocketed. The legal win was the green light investors needed. That's how a single court case can transform a company's outlook. Lloyds' rise isn't just luck. It's the result of smart strategy, careful planning, and a relentless focus on long-term goals. The bank's leadership has consistently made bold decisions, adapting to changing market conditions and staying ahead of the competition. The bank has focused on cutting costs and boosting efficiency, turning more revenue into profit. By streamlining operations and eliminating unnecessary expenses, Lloyds has been able to reinvest in areas that drive growth and innovation. Heavy investment in digital banking has made Lloyds more convenient for customers and cheaper to run. The bank's mobile app and online services are now central to its customer experience, making banking faster and more accessible than ever before. Digital transactions cost less, improving margins and customer satisfaction. Customers appreciate the ease and speed of digital payments, while Lloyds benefits from lower overhead and increased efficiency. The broader economy is helping too. Inflation is easing, wages are rising, and people feel more secure. This positive environment encourages spending and borrowing, which supports Lloyds' growth. Lloyds' strong position in mortgages and everyday banking gives it a stable, low-cost funding base. This allows the bank to offer competitive rates and reliable service to millions of customers across the UK. This foundation, combined with cost control and digital innovation, creates a resilient business model. Lloyds is able to weather economic challenges and seize new opportunities as they arise. The bank is well placed to benefit as the economy improves, with a strong balance sheet and a clear vision for the future. Smart decisions and a solid core have earned Lloyds renewed market confidence. Investors and customers alike see Lloyds as a leader in the industry. It's a blueprint for success in modern banking, showing how tradition and innovation can work hand in hand. That's why Lloyds is thriving today, and why it's set to succeed well into the future. With Lloyds stock at a decade high, what's next? The bank has emerged from restructuring and legal battles as a leaner, more digital organization. The challenge now is to sustain growth in a changing financial world. Analysts' positive targets suggest more upside, but future profits and shareholder returns will be key. Investors will watch earnings and digital progress closely. Risks remain. Economic downturns or new competition could threaten growth. Lloyds must keep innovating and serving customers to stay ahead. The story so far is one of resilience and smart strategy. The hope. This surge marks the start of lasting stability and growth for Lloyds and its millions of stakeholders. We'll be watching as the next chapter unfolds.